Um, Now, as far as something like maybe the American public doesn't understand about the tax system, and like the fact that they're, say filing their taxes and claiming certain things, is there anything that you could share like that would enlighten the person who's kind of like just robotically filing taxes and don't understand it? Like, is there language? I know the language. A lot of people don't really understand like the difference between income and wages, and certain things and how to claim certain things. Is there any insight into that you could share?
Well, so the thing, well, where I worked in EO determinations, we had this thing called the master file, okay? And so the master file, so, like the W-2s you get, the 1099-Rs, you know, or like the organizations, a lot of times I dealt with force firsthand, that would have to pay employment taxes and pay those returns or the 990s, okay? You know, those those are in a system, okay? So a lot of times what the IRS will do is like, let's say, you know, like this is all in the system. So I can tell you firsthand when I was auditing nonprofits, I could see exactly, what 90 was filed, if they're employing people, I could see what, 941s were filed. If they're contracting someone, I could see if they are filed 1099. So the IRS can see it, unless, there's a caveat. If the person that's like for example, like if your employer, if they don't file the W-2, then they won't be able to see it. So I mean, hypothetically, if your employer doesn't file a W-2 and you don't file a W-2, the employee, then they wouldn't know about it. But the caveat is that, a lot of times those, you're probably working for a business, and that business, they want to claim the deduction. So what they're doing is they're going to have to file a W-2 in order to claim that deduction. So,
So if
um,
you hypothetically, if you have a business and you got employees and these people never filed into the system, they basically would never exist and they would never pop up on the radar as having a tax liability. Is that correct?
well, yes, that's correct. However, there are ways to get around that. And so I can tell you firsthand, I hear a lot about the IRS doesn't call people and not. That's not entirely true. I can tell you my own department, there are situations where we actually were allowed to call people. And in that case that you're talking about, the one way you get around it is someone just tells me. So they're telling like, oh, I was being employed for such and such amount of years, and I've been scamming the system. If you tell me that, I mean that's great. I can just go back and fix it, and you know they can get audited and all that. So yeah, so what you're saying is true. But a lot of times people forget is that if almost it's like a form of snitching on yourself, isn't it? You just tell me,
Yeah.
and yeah, then I would know about it. Then you can get audited and go through all that great stuff where, you know, you get assessed and pay penalties and interest on those wages that you weren't reporting.
So for the average working class person who's being taxed up to 40, 38, 40% of their income, 45%, what what can they do to kind of lower their tax liability? I mean, is there, they're not a rich person, so they don't have all these different tax shelters or ways they can, write off or stuff like that. But what can the average person do that they don't maybe know about to help lower their tax liability?
Well, that's a great question. Um, I gotta be honest with you, it really is the tax system really is geared towards the rich person. There's a lot of things rich person like me I saw firsthand. They can create organizations tax exempt under 501(c)(3), and so they can create make charitable contributions that are tax deductible, and then get you know big deduction on that, their itemized deduction, especially they have like a home mortgage interest. But yeah, it's just that's a tough question because it really is rigged towards the rich person.
So for the average working person, then if they don't have, for instance, like an S corp or LLC, or they don't have um, any write offs or anything they can claim as liabilities, they're hit. They don't really. There's not a lot they can do, but continue to just work in the system. Then is what you're saying.
Well, yeah, I mean, unless they're dirt poor, then yeah, they're not gonna have to pay anything. But I mean, the tax system is the most worst towards the middle class person, the working person, the guy that he's not dirt poor, homeless, but he's not a rich guy either. He's kind of just you know working a job every day, gets a wage, kind of middle class. There, it's really hard. I mean, there's some things like you'll contribute to an IRA, the IRA deduction, HSA, if you have high deductible health insurance. But yeah, there's so much more you can do if you're rich, and I saw it firsthand with these nonprofits. I'm telling you, people get confused. A lot of times people think, when talking to friends and whatnot, they think nonprofits is not much money. There's a ton of money in nonprofits.
Yes. So legally, how much does the nonprofit have to give to the cause that they're supposedly representing? So, say if they're doing a charity to say help kids with a certain birth defect or something. What percentage if we do a fundraiser and you raise, like, say for instance $1 million, what percentage of that do you have to actually give to the cause?
Well, that's a great point, because one thing that we look for is whether or not your expenses, a lot of times in order to get money, you have to fundraise, and that costs money to fundraise. We see whether or not your fundraising costs are commensatory, because there are tax shelters where, they just they contract people, they hire people, they pay a bunch of money to fundraise. There's not a whole lot of, money they can get fundraised. That's one thing that's, if that's the case, that's an organization we're going to try to get their exemption away from, deny them. But so, and it just depends. I mean, there's so many things to get around that too, because let's say you get some money, okay. So one way to get around it is that you say, oh, they're contracting someone, and sometimes a lot of these organizations they'll have related for-profit businesses, and depending on how they structure it, they create a conflict of interest policy. They put some things in their bylaws where they can actually legally make money off the nonprofit. And we see it, but the IRS, we can't do anything about it because they've got the conflict of interest policy. They've got certain things they need in their bylaws to get it. And, if we deny them exemption, they can go to court and they can get that reversed.
So as far as that number, that percentage number, is it an exact or the flexible? Is it
It just
12%?
depends. I can't really give you a percentage number.
Okay.
It could. I'm telling you, some of these organizations, they can really get away with a lot. We just can't get things to stick. Because one thing you have to keep in mind too is that with these nonprofits, we have to keep in mind optics. And so, a lot of times we'll see with these nonprofits, if they get denied or something or whatnot, I remember a couple of years back, there was an organization that was doing some very clear-cut political campaign interference. I believe it was a 501c3, and 501c3s, they can't do any political campaign interference. And in their denial letter, whoever the agent was, they mentioned something about Christmas caroling is not charitable. And that got some backlash in the media. The people were going, oh, Christmas caroling isn't charitable. Oh, Christmas caroling is religious. That's what the IRS says. What are they talking about? So that's another thing you have to keep in mind. That's another reason, too, why they're able to get away with so much. So I can't give you an exact percentage, but I can tell you there's a lot of cases where that's not always the case. There are some good organizations out there. There's a lot of cases where there's organizations, they don't give a whole lot out to the actual cause.
So for the most part, you're saying these 501cs, like when you see these people have these charitable fundraising galas, and they have, like you said, all these exorbitant expenses with the meals, with the location, with the entertainment, and then they do, like, say, an auction, and at the end of the day, based on expenses and cost, it pretty much zeroes out. So it's like they made money, but they didn't make money.
Well, if it's really extreme enough, we can deny, and you know we can hope the court holds it up. I mean, if it's really
But I
extreme,
mean, if this organization is already established and they're doing these events, I'm saying that in all essence, when you talk about, like, okay, like I said, if they raised $1 million, but it costs, based on the entertainment, who they hire, the catering, everything, if it came out to $1 million, I mean, you know, there's no way to really determine that, correct?
well, so I think I understand what your question is. So in that case, they would have to report it on their 990. Okay, so that would be, it would sound like if they're getting like fees from fundraising, that would be gross receipts related to the furtherance they'd say from related to the furtherance of exempt purpose, or sometimes they might even report that as an other source of revenue. So we would know exactly how much revenue they're getting, assuming they're reporting it correctly. But or we can, there's some other things you can actually. We see enough flags, you can actually go and you can get a very intensive audit. We can do that. We can, but yeah. So you can do that, and we can look
So,
again. We can look at the 990, see what expenses there are, see if there's anything else we can find. But yeah, there's people will be surprised. There's not a lot. There's some really interesting things. If you can,
now,
for your viewers, one of the things that's really interesting, if you go on the IRS website and you type in exempt organizations revenue rulings, there's some really fascinating reads of what are referred to as revenue rulings, where different things like you'd be surprised where some of the things these organizations are allowed to do.
now I got a question for you. What is the actual law that requires an individual to actually pay taxes?
Um,
Because I've read stuff where it says taxes are voluntary. I'm just out of curiosity. What is the
yeah.
actual law that compels a person? Because it seems like it's a voluntary system.
Well, I gotta be honest with you, I'm not super familiar with. I've heard the things where like sovereign citizens, and I kind of you kind of you kind of see that sometimes when as an IRS agent when I was looking through things. But I'll tell you what, in practice, it's just not voluntary. That's
Well,
not
that's
how
what
it
I mean.
works.
But I mean, what's the actual law that says, like, a person who's working, whether you're farming or say you're privately contracting, that says you have to file taxes? Because most people are doing it just because they've been taught. But I'm saying, what is there an actual law that you know of that says by law you have to file? If you're out here digging ditches, you have to, file that you made this much money. I mean, I've never read it. I'm just curious if there is actual law.
I gotta be honest with you, I'm not super familiar with that. I I just I'm not super familiar with the exact law. I just know it. I can tell. Well, we both know that in practice, it's just not how it is. But one thing I will add, the ditch digger, if they're really not getting by, there are things we call filing requirements. So let's say they're only making like $10,000 in wages, and no one else can claim as a dependent. Okay, they don't even have to file a tax. In that case, they wouldn't pay any federal taxes. Um, but yeah, I'm be honest with you, I'm not exactly certain with any specific law. That's a good question. Kind of stumps me a
Yeah,
little bit.
because yeah, I'm just curious because I've seen, like, um, documentation floating around, and I'm just like wondering, like, what is the actual law? Because, like I said, if a person is not profiting um, from the sale of real estate or stock dividends, then what is the law that says your labor should, you got to voluntarily pay taxes on it? You know what I mean? That's not considered income, because people don't understand. There's a difference between the definition of income and wages.
Yeah. So yeah, to touch on that. So wages are just so money that you earn. Wages and salaries are money you earn as an employee. Okay. So I'm working a
But is that
job.
Yeah, so wages you earn from a job, physical labor, income you earn from returns on investments, real estate, stock dividends, investments. So
So
one is both taxable, one taxable, and one's not taxable.
unless it's tax exempt interest, your interest would be would be taxable. Interest, dividends, ordinary, qualified dividends are taxed at capital gains rates. Rental income, after expenses, it's taxable. Um, just sole proprietorship. If you're hustling and you're a sole proprietor, you fill out a Schedule C, and if you have any profit, that's taxable. And if you're making enough, it's eligible self-employment tax. Um, S corp again, it gets taxed at. A lot of people don't understand this. The S corp gets taxed at the it actually the S corp. It's a modified pass through. So generally speaking, the money you earn from the S corp, it flows down to the shareholders, and a lot of times, I mean, what I'll see is that you'll see like a single member S corp, you'll see the income it flows to the shareholder, and also a lot of times they're working a wage. It's one way to get around the self-employment tax. But yeah, there are some examples that are that are of income that's not taxable. I do believe those are by statute. Um,
Have you read anything that actually defines what a taxpayer is? Like, is it a definition in a book somewhere that shows that? Because I've read a lot of Black's Law dictionaries. I've never seen what is defined as a taxpayer under the United States Code. I mean, is there any? Do you know of an actual statute? Is there a statute that says, I know if you're a federal employee and you're contracting with the government, you're required as far as under the definition. But if you read anything else as far as that
yeah,
relates to
I'm
that,
not super familiar with that. I do think there's actually a statute with, like, if you're a resident of DC, or if you are working for the federal government or something like that, you have to pay taxes. But honestly, I think that you bring up a great point. I haven't thought about it a ton. I've heard some things too, like you know, I, taxation and stuff and things like that. Um, and unfortunately, I've seen some things the IRS that kind of makes me think that. But yeah, you bring up a good point. You kind of stumped me.
yeah, I just was curious because I mean, I've studied a lot of stuff, and I had some people break some stuff down to me. So through my research, I've never found anything outside of, like you said, a federal government employee. Like, you remember the military, you live in Guam, Puerto Rico, District of Columbia. You're considered a United States citizen, therefore you're taxable under the United States Code. But I was just wondering for other people living in other states, like if there's anything, because a lot of people they don't really, people don't really understand the tax code. And there's a lot of stuff right now in the news about, like, Deutsche, looking into the IRS and
Oh yeah,
uncovering a lot
I would
of
love it.
ways.
As an IRS whistleblower, I've written to a lot of people. I've written to congressmen. Um, I've written to a lot of different departments within the IRS. I would love Elon Musk or Donald Trump, whoever, reach out to me. I would love to help them cut some waste. Help out firefighters, and a lot of it, like especially the firefighters, just enforce things that are already on the books. So yeah, shout out to your viewers, please. They could help me get in contact with one of those higher up guys. I would love to make it happen. Make our country better again. Um, but yeah, going back to your question, I do know in practice. Okay, I'm be honest with you, I'm not super familiar with those statutes. That you bring up some good points, but I do know in practice, a U.S. citizen, they're supposed to report all worldwide income. So, like a U.S. citizen, like if, for example, they travel out to Germany, okay, they're supposed to report all income, okay. Now, there's some foreign earned income exclusion, like they work a job in Germany, I don't know, like making bread or something like that. There's foreign earned income exclusion where they get to exclude that in their U.S. tax return. There's also the foreign tax credit. They're making, they're paying tax on income that's foreign, and they get to use that as a non-refundable credit. But again, that's in practice. I think you bring up some good points. I I'm not super familiar with the statute. It's just something that's in practice.